next week we've got the Reserve Bank. What are you expecting from them? Similar sort of story that we heard from Jerome Powell. Is that going to be a similar comments from Michelle Bullock?
Yeah, I expect so. So I don't expect that there's the need for a tightening still within the cash rate. I know that the market reacted pretty strongly after the inflation data released last week and started to push the prospect of another rate rise up. And you've had various economists talk about another 25 basis point increases over the short term. I'm not in that camp. I'm in the camp pretty much explained by Jerome Powell that is likelihood that they need to keep the current contractionary settings maybe for a bit longer. We had thought that there would be 2 interest rate cuts in Australia in the second half of this year. We still expect possibly 1 to occur before the end of the year, maybe pushed into the beginning of next year. But nonetheless, if you look at the trajectory for inflation, it's still coming down.
The other big issue or thing coming up is the federal budget in a couple of weeks, and there's going to be some big ticket spending items in there and tax breaks from the 1st of July. So is that going to add to inflation in the economy for the second half of this year?
So it will. What we also know is just the tax breaks themselves are going to add about 0.2% to GDP growth over the year. And the work that we've been looking at shows really that there's been a disconnect between monetary policy and fiscal policy in terms of trying to bring inflation down. Clearly, the government thought the Reserve Bank, with its increased interest rates to 4.35%, wasn't doing enough of the heavy lifting that it was going to be able to maintain a relatively loose fiscal policy setting, which it has done over the last 18 months or so. You're now seeing government spending as a proportion of GDP up above 27%, and clearly that's just too high. What ideally we would have liked to have seen is government policy tighten and at least have a neutral setting. It hasn't done that. And so what we are seeing is that monetary policy's really been stomping on the brake to try to bring inflation down, yet fiscal policy's still been sitting on the accelerator, and there needs to be a better alignment between the two.
Yeah, when the budget is released in a couple of weeks, the government's Future Made in Australia policy seems to be one of the cornerstones, giving big subsidies to certain businesses, manufacturing green energy companies. Is this just going to make the issue of inflation worse?
Well, it does depend on how they're going to spend that money, but ultimately it's just the argument that total government spending is too high. It's very difficult to say there's any one program or any one policy that's caused this leap in government spending to change from around 24.5% of GDP to 27%. It's just a universal loosening of the purse strings. But this Made in Australia policy that the federal government looks to be promoting, there's lots and lots of people, including current and former productivity commissioners, coming out saying that government picking winners is just a bad idea. Now, we all know that to be true. The issue is going to be, what are they trying to spend the money on? And ideally, what we're seeing is that they're not trying to re-prosecute a generalised spending within certain elements of the economy that we know we just aren't competitive, and that any amount of government money in there isn't going to change those fundamentals. And so, again, it's in the detail. We haven't seen the detail, but certainly we're not advocates that overall throwing of cash at manufacturing sector in Australia is going to reverse decades of where we've been uncompetitive globally.
There's also a report from OECD today expecting GDP growth of 1.5% for Australia this calendar year and 2% next year.
Yes.
Are you expecting economic growth to pick up in 2025?
No, I've actually just finished our forecast last night that are about to be released, and they're very, very similar to that number. In fact, probably a little bit weaker next year than what we've got from the OECD. And the reason for that is that we still have very weak consumption activity, and that represents about 2/3 of economic activity. Business investment is slowing because aggregate demand's falling. Really, the only highlights of growth have been in government consumption. And again, ideally, we'd actually like to see some of that government consumption pulled back down.
Dr. Brendan Rynne, Chief Economist at KPMG, thanks for your time today.
Thank you for having me.